Do you know your rights under the Fair Credit Reporting Act? This question marks the beginning of our journey into the world of financial understanding. Today, we're going to unlock the Fair Credit Reporting Act, or FCRA, a vital piece of legislation that plays a significant role in our financial lives. The FCRA was established by the federal government to regulate the collection, dissemination, and use of consumer credit information. It sets strict guidelines for how this information is handled, with a focus on promoting accuracy, fairness, and respect for the consumer's privacy. But why does it matter to you, you may ask? Well, think of it this way. Every time you apply for a credit card, a loan, or even a job, your credit report can come under scrutiny. This report, compiled by consumer reporting agencies, paints a picture of your financial history and creditworthiness. It's a vital document that can influence everything from your ability to secure a mortgage to your chances of landing a dream job. The FCRA is the shield that ensures your credit report is accurate, private, and only accessible for legitimate purposes. It gives you the right to know what's in your report, to dispute inaccurate information, and to have outdated negative information removed. In essence, it empowers you to take control of your financial narrative. In the coming minutes, we will be exploring the key definitions within the FCRA, shedding light on the rights it gives us, and the responsibilities it places on companies that report our credit information. We'll look at terms like consumer report, consumer reporting agency, and adverse action, among others, and explore what they mean in the context of the FCRA and your financial life. But don't worry, we'll keep the jargon to a minimum and the conversation engaging. Understanding the FCRA is not just for legal experts or financial enthusiasts. It's for everyone, because when it comes to your financial future, being informed is being empowered. With that said, let's dive in. Understanding the FCRA is crucial for everyone, not just financial enthusiasts. So stick around to empower your financial future. Scene script. Let's start with some key definitions within the FCRA. First up, we have consumer. This term refers to any individual whose creditworthiness, credit standing, credit capacity, character, general reputation, personal characteristics, or mode of living is evaluated for the purposes of establishing eligibility for credit, insurance, employment, or other purposes as outlined in the FCRA. Moving on, we have the consumer report. This is any written, oral, or other communication by a consumer reporting agency bearing on a consumer's creditworthiness, credit standing, credit capacity, character, general reputation, personal characteristics, or mode of living, used or expected to be used for a permissible purpose. Next, let's look at the consumer reporting agency. This is any entity that regularly engages in assembling or evaluating consumer credit information or other information on consumers for the purpose of furnishing consumer reports to third parties. These agencies play a crucial role in the credit reporting ecosystem, as they are the ones that compile and share your credit information. Now let's talk about permissible purpose. This refers to the legally defined reasons under the FCRA for which a consumer report can be provided by a CRA to a third party. These reasons include the extension of credit, employment purposes, underwriting of insurance, and other purposes as specified in the FCRA. Next up is adverse action. This is any action taken by a company that is unfavorable to the interests of a consumer, based in whole or in part on information in a consumer report. Examples of adverse actions include denying credit, employment, insurance, or increasing the cost of credit. We also have the furnisher. This is an entity that provides information about consumers to consumer reporting agencies. Examples include credit card companies, mortgage lenders, and auto finance companies. Finally, we have investigative consumer report, credit score, identity theft, and file disclosure. Each of these terms plays a significant role in the credit reporting process, and understanding them is key to navigating your rights and responsibilities under the FCRA. These definitions form the foundation of the FCRA and help us understand our roles and the roles of those involved in credit reporting. Continuing with our key definitions within the FCRA, let's dive deeper into some more terms that will help us navigate the world of credit reporting. First up is permissible purpose. This is a term that defines the legally acceptable reasons under the FCRA for a consumer report to be provided by a consumer reporting agency to a third party. These reasons could include the extension of credit, employment purposes, underwriting of insurance, and other specific purposes as outlined in the FCRA. In short, It's the why behind a company's request for your credit information. Next, we have adverse action. This term refers to any action taken by a company that isn't in the best interest of the consumer and is based wholly or partially on the information in a consumer report. For instance, if a company denies you credit, employment, or insurance, or increases the cost of your credit based on your consumer report, that's considered an adverse action. It's a crucial term to know because it triggers certain rights under the FCRA, such as the right to a free copy of your credit report and the right to know who provided the information that led to the adverse action. Last on our list for today is furnisher. A furnisher is an entity that provides information about consumers to consumer reporting agencies. These can be credit card companies, mortgage lenders, auto finance companies, and others. They play a significant role in the credit reporting ecosystem by supplying the data that forms the basis of your credit report. As such, they have responsibilities under the FCRA to provide accurate and complete information. These definitions help us understand when and how our credit information can be used and by whom. Stay tuned for the next part where we'll continue to break down the key definitions within the FCRA. Moving on to more key definitions within the FCRA. Firstly, let's talk about the investigative consumer report. This is a type of consumer report that contains information obtained through personal interviews with people who are acquainted with the consumer. This could include neighbors, friends, or associates. The information gathered generally pertains to the consumer's character, general reputation, personal characteristics, or mode of living. So, if you've ever wondered how detailed these reports can get, well, they can get pretty detailed. Next up, we have the credit score. This is a numerical value or categorization derived from a statistical tool or model. It's used by lenders to predict the likelihood of certain credit behaviors, such as whether a consumer is likely to default on a loan. Your credit score is a vital piece of information, as it can directly impact your eligibility for credit and the terms you are offered. Lastly, we have identity theft. This is a type of fraud committed using the identifying information of another person. The FCRA has specific provisions to protect consumers from identity theft, including the ability to place a fraud alert on your credit report if you suspect you have been a victim. So if your credit card details have been stolen or you've been a victim of a phishing scam, the FCRA has got you covered. These definitions further elaborate on the types of credit information and how they can impact us as consumers. The FCRA provides robust protections for consumers, but it's up to us to understand these terms and how they apply to our own situations. By understanding terms like investigative consumer report, credit score, and identity theft, we can better navigate our financial futures and make informed decisions about our credit. Remember, knowledge is power, especially when it comes to our financial futures. In the next scene, we'll be discussing even more key definitions within the FCRA. Keep learning, keep growing, and keep mastering your financial future. Finally, let's look at the last key definition within the FCRA. This definition is a powerful tool in your arsenal as a consumer. It's called file disclosure. File disclosure refers to the right consumers have to access all the information in their file at a consumer reporting agency at the time of their request. Yes, you heard it right. You have the right to know exactly what information a consumer reporting agency like Equifax, Experian, or TransUnion holds about you. This is not just limited to your credit history or credit score. It includes all data collected about you, such as your personal identifying information, account status, payment history, and any adverse action notices you may have received. Think of it as your financial profile, a complete snapshot of your credit-related activities. It's like looking at your financial self through the lens of credit bureaus. Now, why is this important? Well, it's simple. Knowledge is power. Knowing what's in your file can help you understand your credit standing better. You can see which aspects of your financial behavior are helping your creditworthiness and which are harming it. Moreover, this visibility allows you to identify any inaccuracies or discrepancies in your credit report. If you spot any, you have the right to dispute them and have them corrected, ensuring that your credit report is an accurate reflection of your financial behavior. Remember, a clean and accurate credit report can open doors to better interest rates, more favorable credit terms, and even influence decisions related to employment and housing. In a nutshell, file disclosure is a key aspect of the FCRA that empowers consumers with transparency and control over their own credit information. It's a crucial part of maintaining your financial health and planning for your future. So, next time you request your credit report, remember, you're exercising your right to file disclosure, a right that's there to help you navigate the financial landscape with confidence and clarity. Understanding file disclosure is key to knowing what information is held about you at any given time. Now that we've broken down these key definitions, let's summarize what we've learned. The Fair Credit Reporting Act, or FCRA, is a robust piece of legislation that impacts us all, whether we're aware of it or not. Understanding the key definitions within the FCRA can empower us as consumers and help us navigate our financial futures with confidence. We've learned that a consumer is any individual whose personal and financial information is evaluated for various purposes, including credit, insurance, and employment. A consumer report is a communication by a consumer reporting agency bearing on a consumer's creditworthiness and other personal characteristics. A consumer reporting agency is an entity that regularly engages in assembling or evaluating consumer credit information for the purpose of furnishing consumer reports to third parties. Permissible purpose refers to the legally defined reasons under the FCRA for which a consumer report can be provided to a third party. Adverse action is any action taken by a company that is unfavorable to the interests of a consumer based on information in a consumer report. A furnisher is an entity that provides information about consumers to consumer reporting agencies. An investigative consumer report is a consumer report containing information obtained through personal interviews about a consumer's character and lifestyle. A credit score is a numerical value derived from a statistical tool used to predict the likelihood of certain credit behaviors, like defaulting on a loan. Identity theft is the fraud committed using the identifying information of another person. And finally, a file disclosure is a disclosure of all the information in the consumer's file at the time of the request, provided to the consumer upon request. These definitions are the building blocks of the FCRA. They help us understand our rights and responsibilities when it comes to our credit information and how we can address any issues that may arise effectively. With these definitions in mind, you're well on your way to mastering the FCRA. That brings us to the end of our exploration of the key definitions within the Fair Credit Reporting Act. Today, we've journeyed through the complex landscape of credit reporting, shedding light on the pivotal terms that shape our understanding of the FCRA and our rights as consumers. We learned that a consumer under the FCRA goes beyond just an individual seeking credit. It encompasses any person whose personal and financial characteristics are evaluated for various purposes, including credit, insurance, and employment. We've also discovered what constitutes a consumer report and the role of consumer reporting agencies in assembling and evaluating our information. We've delved into permissible purposes, the legally defined reasons for which our credit information can be used. We've also highlighted the concept of adverse action, which refers to any unfavorable action taken based on information in a consumer report. We've understood the role of furnishers, the entities that provide our information to consumer reporting agencies. We've also looked at investigative consumer reports and credit scores, two critical components of the credit reporting system. We've discussed identity theft, a significant concern in the digital age, and how the FCRA provides specific provisions to safeguard us. Lastly, we've talked about file disclosure, the right to know all the information in our consumer file upon request. Understanding these definitions is more than just mastering the jargon. It's about empowering yourself to navigate your financial journey with confidence. It's about knowing your rights and how to exercise them. It's about ensuring that the entities involved in credit reporting are held accountable to their responsibilities. So, as we wrap up this enlightening journey, let's remember the significance of what we've learned today. Let's use this knowledge to our advantage, to take control of our credit information and ultimately, our financial future. Remember, knowledge is power. Keep learning, keep growing, and take control of your financial future. Share your thoughts in the comments below, and don't forget to like, share, and subscribe for more informative content.